They say fortune sides with the man who's bold and brave. Still we need to figure out the path to take today. I've spent my life up till now trying to uplift and empower and show you how. With financial fear, the healthy coins here. Oh, spend less than you earn. Make a budget, don't just burn. Invest as early as you can. A budget is part of the plan, yeah. Oh, pay yourself, but don't forget it. Lower your tax and be strategic. Money doubles in 72. Healthy Coin is rooting for you, yeah.
Hello, hello, hello. Hello, everyone. All right. The purpose of this presentation is to dive into accountable plans. Now, this is the first of many Small Business Mondays, and it is my pleasure to dive into some important concepts that you as a small business owner need to be aware of. So with no further ado, I'm going to jump right into the content. Stand by. All right, and I'll leave that up for just a moment just to make sure everybody can see that okay. I'll be back in a sec. All right, and I'm back. Let's dive in. So this is for the accountable plan. Now, by way of introduction, for those of you who do not know who I am, my name is Robert. Professionally, I am a licensed CPA based in the Midwest, but I personally work with clients in 49 of the 50 states. On a personal level, I am a big fan of real estate, specifically the buy and hold long-term rental investing strategy. That's my secret sauce. I love some bourbon. Currently, I'm nursing some Angel's Envy. Kind of a weird call out here, but I also like sneakers, shoes, gym shoes. So if we ever connect, ask me what types of shoes I'm wearing, and I'll be happy to kind of provide you with a long story about the pair I'm wearing and the reason I'm doing so. Anyway, this is me. Nice to meet you virtually. Let's get after it. So what is an accountable plan? Well, simply put, it is a plan under which an employee is reimbursed for expenses or receives an allowance to cover expenses. That's what an accountable plan is. Now, the reason this is so important is because if you can satisfy some requirements, an accountable plan can create tremendous tax benefits for you, both for you as a small business owner and for employees. So I'll give you the backdrop, right? To better explain this, is it useful? I would argue yes, but the reason why is because if we go back in time under the new tax law that was enacted back in 2018, that was the TCJA, the Tax Cuts and Jobs Act, an employee was no longer able to deduct unreimbursed employee business expenses on their individual tax returns. So if you've been around for a while, you've been kind of in the arena, you know that there used to be a form called the 2106, right, where you could pick up various expenses, but those days are gone, right? So now employees can no longer deduct those miscellaneous deductions, and employers can help mitigate this, this loss from the employee standpoint of the reimbursed business expense deduction by having an accountable reimbursement plan. You'll hear me refer to it as an ARP later, accountable reimbursement plan. That's what the acronym stands for. And if we have this in place, this is so much better than using a non-accountable plan. And by non-accountable plan, I mean the typical expense reimbursement, expense report, because it floats right to the W-2. Okay. So I should have started off with this, but this won't be a long presentation. I know I earmarked 30 minutes, but we might be done in about 10 to 15. So stick with us. So let me give you some content just to wrap your head around it. An accountable plan is favorable compared to that of a non-accountable plan for three key reasons, right? You still get the same deduction from a business expense standpoint. You can exclude the information from the employee's gross income, which shows up on their W-2, and it's exempt from withholding and employment taxes. All these things are extremely beneficial, and we can see the regulation codes there at the very bottom. All right, so there's three main requirements, right? You got to know how to play in the game. So number one, it has to have a business connection. That's a requirement. Meaning, right, if you're in the business of, I don't know, making pottery plants, I don't know, potted plants, you can't go out and rent a Lambo, right? That wouldn't be a business connection. There has to be a substantiation, which kind of favors that of the previous requirement, but it needs to be substantiated, right? It actually has to happen. It can't just be for that Lambo, but there isn't a Lambo. The final, my examples crack me up. Okay, so the final requirement is that the amounts received in excess of the expenses actually need to be returned. So let's say I grant my employee a $20 reimbursement plan, but it only charges them $15. The $5 has to be returned. So any delta needs to go back to the employer. These are the big requirements. I'll give you one crucial piece of the equation, and it's a written policy document. Now, a written policy document will cover expenses that will be reimbursed. It'll capture the method in which they will be reimbursed. It will outline specific documentation around what it looks like to have documentation submitted. And then finally, the timing needs to be communicated as well. So once the above are met, the employer should adopt a clear and concise written accountable plan document or a policy statement that clearly spells out the details of the plan and the conditions imposed on the expense reimbursement and the allowances. All right. So the reason why I kind of include this is because employers should kind of have some type of internal compliance just to ensure that all the employee reimbursements are adequately received and that the records are being maintained. So later on, you'll hear me refer to another acronym, HAD. This is a big part of it, right? It's the A, the accountability piece. Okay, so let's keep going. So in the next two screens, I'm just going to share with you some of the overall benefits from an accountable plan. I've already shared a few of those with you before, but removing things from the W-2, not exposing our employees to extra payroll taxes, not surrendering employers to additional payroll taxes as well. These are all the benefits that come with the accountable plan. And if we compare all of this to a non-accountable plan, if you do the math, you could probably tease out, okay, there's some tremendous upside to actually creating this and abiding by it. All right, moving a little bit quicker. I'm not going to read this to you. It's only 4 p.m. Central Standard Time. You can't go to sleep yet, but just know that if reimbursement payments are made under a non-accountable plan, those amounts are subject to rolling into the employee's wages. You have to be subject to payroll taxes like Social Security, Medicare, and withholding. So Social Security and Medicare, those two kind of get married, have a family, and we call it FICA, right? That's 7.65% for the employer and 7.65% for the employee. If you decouple the FICA, right, Social Security and Medicare, it's 6.2% and 1.45% respectively. So if you just start to think about, okay, I have X number of employees, I typically see X or Y amount in, reimbursable expenses. Sure, I'm getting the deduction, but think of all of the tax that's just kind of sitting out there in the ether that should probably go back in your pocket or be reinvested back into your business. Okay. If you disagree with all of that and you would prefer to pay the IRS, then that's perfectly fine too. In fact, if you're so in love with paying taxes, why don't you pay mine? I would love for you to do that. Okay, so this is the tax treatment. Let me move forward with an example. I really like examples because they help crystallize pretty dense topicality. So this is your employee. Hopefully you can see him. He's the gentleman in the collared shirt looking at the laptop, much like I'm doing, minus the collared shirt. This is your employee. We will call him Mike. Mike is in your sales department. He is frequently shaking hands, kissing babies, closing deals all day. Mike is the man, right? But Mike needs help, right? He has needs. And some of those needs include, let's see, he's got a LinkedIn account, the premium version, which costs him a monthly subscription amount. He has to use that to prospect and reach out to target audience members. And he also has an iPhone, right? Apple iPhone. He likes it. He needs that to be paid monthly because, well, it's a costly piece of hardware. And what else? He needs internet, right? This whole work from home life. Yeah, that's a thing. So you need internet to be connected. And let's just add in, the random one-off of office supplies that Mike will likely have. He needs, printer, ink, and paper, yada, yada, yada. Now, before 2018, he would be able to write these things off on his 2106. That's that form that was deprecated, that was used to capture, these expenses. But now those days are gone. So one of the ways in which you can help Mike out is through an accountable plan. All right. So let's say all these numbers kind of rolled up into $500 a month, right? We'll just use it for simple math. $500 a month under an accountable plan. The employer would deduct $6,000 worth of expenses on their tax return, and the employee would pick up $6,000 in their pocket but pay no tax. That's a win. That's a win. Now, under a non-accountable plan, same math, $500 a month, but all of a sudden we trigger all these taxes, right? First off, it's triggered as compensation. It's no longer an expense on the tax return, right? From the employer standpoint, they're being forced to withhold employee taxes. They have to pay employer payroll taxes. The employee needs to roll it into their W-2. They'll pick it up on their personal tax return, and then they'll also withhold more payroll taxes. So lose-lose. Hopefully this example makes a little bit more sense in trying to understand why an accountable plan is so beneficial. Now, I won't read these additional items off to you. I'll leave them up here for a moment. But do know, if you are intrigued by this, you're interested in this, I've done two things. I've curated a unique course that's designed to kind of walk you through building out your own accountable plan that you can use. And also, I have free templates that I can give away. So the first 10 people that email me at rwhitley@healthycoin.net, the first 10 people that email me and say, I would like to see a template for the accountable plan, you're going to get it in your email. First 10 only. I can't give everything out for free. So we'll use that, try and drive some engagement here. But this is all I got. So wrapping it up, we'll fit right in there under 15 minutes. I'll leave you with this final acronym, okay? HAD. H stands for honest. That is the appropriate way to do accounting, whether it be expense reports, taxes, whatever. Just go for honesty, because then you don't need to remember two versions of anything. You don't have to worry about trying to fabricate or back up a lie. Just go honest. It's simpler that way. The A stands for accounting, accountability, staying accountable, right? Kind of pun intended there. But, having things in place, it's solidified, it's strategic, it's orderly. That's what I mean by kind of accounting and accountable. And the last one is D. D stands for document. You want to document everything, be it an expense report, an accountable plan, tax returns. Just put it on paper, save it somewhere, because one day you might need it. So be honest, stay accountable, and document your activity. That's all I got. 15 minutes. We're out. Until next time, everyone. Hope as well.
They say fortune sides with the man who's bold and brave. Still we need to figure out the path to take today. I spent my life up till now trying to uplift and empower and show you how, with financial fear, the healthy coins here. get it. Lower your tax and be strategic. Money